We welcome you and look forward to hearing your comments and feedback. My name is Tammy Abernathy, and I have the honor of introducing you to Mr. James Bergeron.
On behalf of Secretary Linda McMahon, I am pleased to welcome you to this public hearing on negotiated rulemaking for the Department of Education. This is the second public hearing that we're convening to gather comments on potential topics regarding regulations that govern Title IV programs as authorized under Title IV of the Higher Education Act of 1965 as amended.
Stephanie Aguilar-Smith. Hi, you have 3 minutes.
Perfect, thank you. I'm a higher ed scholar whose research broadly focuses on federal policy's impact on minority serving institutions, particularly Hispanic serving institutions or HSIs, and their students, most of whom identify as Latino. And some of my work examines administrative burdens and the racialized consequences. These burdens include complex rules and processes that limit access to and the use of public benefits, like federal student financial assistance programs. And one key burden is learning costs, the time and effort required to understand a policy, its benefits, eligibility, and how to apply. Research, including a 2018 Gal report, shows that the Public Service Loan Forgiveness, or PSLF, program is riddled with learning costs due to its confusing criteria, and thus many eligible beneficiaries miss out on this critical debt relief. But while deregulation of PSLF and related programs may be warranted, changes could also bring serious unintended consequences. Borrowers and program implementers must relearn new regulations, likely causing confusion and missteps. And students may also make different college and career decisions in response, changes that are tricky to predict, right? For instance, modifying PSLF could deter people from public or not-for-profit work. I'm also unclear about the direction of possible changes amid the current political pressures. The administration's March 7th executive order alleges that PSFL misuses taxpayer dollars and seeks to cancel these benefits to borrowers of activist organizations. And so compliance here will add more regulatory hoops to an already encumbered process. Rather than streamlining access, it would restrict it, harming those who pursue generally lower paying public and not-for-profit careers essential to our democracy. Moreover, barriers to these programs don't equally affect all borrowers. Wealth and student debt are unequally distributed. Students of color, particularly Black students, carry more debt, which limits economic mobility and opportunities like homeownership. Latino students are also disproportionately impacted. Research shows they're often driven by a desire to give back to their communities, and thus often gravitate towards public and not-profit sector work. They also tend to be debt averse, limiting their participation in higher education despite these programs and HSI's generally affordable price points. Ultimately, additional hurdles to debt relief, including ones inadvertently resulting from these deregulatory efforts, may counterproductively suppress to college and debt relief for many Americans. To close, I strongly urge including diverse voices in this rulemaking process, especially Black, Indigenous, and Latino borrowers, and representatives from HSIs and MSIs. Their perspectives are essential to improving these programs. Thank you.
Thank you. Hi, everyone. Good afternoon. Thanks for the opportunity to comment today. My name is Monnica Chan. I'm an assistant professor at the University of Massachusetts, Boston, where I study the impact and interaction of state and federal financial aid programs, including loan repayment. In ongoing work, colleagues and I have documented how the recent instability in loan repayment program availability is stressful and confusing to borrowers. We heard from multiple borrowers in our study that, between the changes with the SAVE plan proposal and the recent changes to the IDR applications, that they would have liked to sign up for an income-driven repayment plan, but they were confused by the quick and frequent changes both in program and application availability. The back and forth of whether or not a program is available or not exacerbates the challenges that borrowers face in seeking and selecting an appropriate repayment plan. And for borrowers that are grappling with other life events and transitions, this complexity and evolution of all of the different federal student loan repayment plans is just sort of an additional layer to what borrowers have described as a stressful and heavy responsibility that they want to fulfill. In my work, I've also found that entering repayment coincides with other important milestones in emerging adulthood for recent college graduates. So multiple participants in our study experienced life events outside of their control. These were things like work-related injuries, flare-ups from a chronic health condition, looking for a job, and then being only able to secure a per diem job, things like that. And so for those individuals, navigating loan repayment became an increased burden that ended up exacerbating their feelings of stress. And it also ended up fostering distrust and disappointment and anger towards important offices and institutions like the President's Office, Congress, the Education Department, and even borrower-facing entities like loan servicers and higher education institutions. So knowing that there were repayment plans that included the option for loan forgiveness like PSLF or the IDR plans really helped ease anxiety for the borrowers in our study that we spoke with, because it provided them an option that helped everything seem manageable. So if I could just close by offering two principles that I've learned from borrowers in these studies and the rich body of academic scholarship in this area to guide the work of the committee. I think the first thing I would say is that loan repayment is a longer-term process that occurs simultaneously with big and small life changes for borrowers. So having options like PSLF and ICR is an important middle option for those for whom the standard and graduate repayment plans and the deferment and forbearance options might be insufficient. I would also concur with recommendations to remove interest capitalization wherever possible. The second thing that I'd share is that more information is better, but it's not enough. The complex processes involved can lead to frustration and, importantly, disengagement. So I think automating and simplifying eligibility and verification processes, as well as small changes to messaging, could really go far in addressing the well-documented administrative and behavioral challenges to navigating repayment. Thanks.
Thank you.
Greetings. My name is Dr. Daniel Anthony Collier. I'm an assistant professor of higher and adult education at the University of Memphis and nationally recognized expert on income-driven repayment and public service loan forgiveness programs. Millions of working and middle-class Americans pursue higher education, advance their socioeconomic standing, contribute to a more educated workforce of society, but also incur debt that cannot be repaid under traditional mortgage-like repayments. Income-driven repayment plans provide critical relief, adjusting payments based on income and family size. These plans are a lifeline for borrowers with significant debts and moderate incomes, including graduate students, women, and persons of color, two groups who are disproportionately affected by systemic wage and employment inequities. However, IDR remains problematic. Borrowers often face negative amortization, causing balances to grow, which increases financial burden and drives psychological distress, even suicidal ideation, as borrowers feel trapped. Moreover, individuals cannot control wider economic shocks, such as those we are currently experiencing. Although the prices of goods might be on the rise due to inflation and/or trade-related scarcity, IDR policies are not responsive to those shocks, only income. In uncertain economic times, current policies force borrowers to choose between loan repayment and basic needs, worsening hardship for families on the financial edge. This concern drove the Trump administration's decision to pause student loan repayment during COVID and several extensions beyond. The lack of clear communication from loan servicers leave borrowers confused and dependent on online communities. Scaling back tools like the IDR visual trackers has further eroded trust and increased uncertainty. Public service loan forgiveness has faced administrative challenge and low approval rates. Restricting who might be eligible right now would upend the lives of millions of borrowers and students planning on this benefit. Any redesign or future policy must consider factors associated with well-being. It's not merely about balancing financial inputs and outputs. This issue deeply affects broader factors like family planning, workplace productivity, ultimately imposing significant financial and non-financial costs on society. Borrowers suggest that addressing negative amortization and offering incremental forgiveness could help reduce their distress. Current policy grants forgiveness only after decades of repayment. Implementing this approach would reduce loan balances over time while maintaining the same degree of forgiveness, easing both financial and emotional burdens. Another valuable pathway forward is to treat borrowers in IDR as if they were paying taxes. Remove loan balances from credit reports and structure repayments as a percentage of income over a set amount of years, like Milton Friedman's original proposal for student loans. Such a policy would bolster our borrowers' abilities to buy durable goods and likely help ease financial and mental distress as the balance is truly abstract, translating into lower financial and non-financial costs more widely, as I previously pointed out.
30 seconds.
No problem. In conclusion, while IDR and public service loan forgiveness offer pathways to manage and alleviate student loan debt, systemic reforms are necessary to address shortcomings beyond those we have already imagined. Thank you.
Good morning. I would like to first thank the United States Department of Education, the Association for the Study of Higher Education, and Scholar Strategy Network for the invitation to speak today. My name is Dr. Frederick Engram Jr., and I'm an assistant professor of higher education at Fairleigh Dickinson University. At Frederick V University, I teach a course titled The History of Higher Education, among others. This makes me an expert on the subject matter directly impacted by the decisions of this government entity and the current administration. I come before you today to speak directly to you regarding the student debt crisis, PSLF, and the anti-Black racism inherent within the system of higher education and the loan borrowing process. In his quintessential text regarding the creation of the American higher education complex, Professor John R. Phelan pointed out a single fact that shapes higher education. That fact, who higher education was intended for. Higher education at its inception, and even now, was intended for wealthy, white, cisgender, heterosexual males. This specific identifier excludes everyone else who does not fit its criteria. It is the same criteria that the current administration of this country and the white supremacists associated with it are attempting to drive higher education backwards to. From the lawsuits aimed at upending former President Biden's student forgiveness plans to the overturning of Roe v. Wade and affirmative action. Each of these actions aimed at destabilizing the most marginalized among us. Public college was free until the administration of former President Ronald Reagan, who intended to determine who could attend college. His tax bills and pulling public support from higher education is what forced student borrowing to become essential for the non-wealthy. The intent was to weaken the middle and lower middle class, read as people of color and women specifically. Public service loan forgiveness was supposed to provide an opportunity for college-going folks to receive relief after meeting the outlined qualifications. However, the PSLF system is not without flaws and has helped to add an additional layer of stress to already overburdened people. Black women carry a disproportionate amount of the $1.7 trillion debt, and this is solely because of anti-Black racism. Anti-Blackness is what drove Reagan's agenda, and it is what is driving Trump's agenda. The debt should be canceled just as the PPP loans were for elected officials. But in the meantime, reimagine the PSLF process so that it is intentionally equitable and not performatively so. Consider the fact that attending college is essential to fill the professional, manual, and alternative modes of employment, and that just maybe
5 seconds.
people should not be forced into lifelong debt to achieve any degree. This ask is not outside the scope of possibilities. It just needs to be made a priority for people more concerned about being labeled racist than they are about not actually being racist. Thank you for your time.
I applaud the department for taking steps to streamline federal financial aid programs in ways that reduce burdens on both students and higher education institutions. First, I want to underscore the importance of not only maintaining but expanding access to post-secondary education as a driver of our nation's economic well-being. This includes 4-year and advanced degrees, which are essential, as well as associate degrees and shorter-term credentials. Our knowledge economy is central to America's global competitiveness, and that hinges on access to education for everyone, regardless of economic circumstances. Second, I want to offer a few suggestions for reducing the administrative burdens that students face in accessing federal financial aid, particularly through income-driven repayment plans. I agree with the premise that simplifying repayment by streamlining IDR options into a single plan can reduce confusion and enhance transparency for borrowers. But simplification should not come at the cost of affordability or access. To truly support borrowers, the new plan should include strong protections, such as a low-income repayment threshold, ideally 5%, and interest subsidies that prevent balances from growing when payments are too low. The new plan should also offer forgiveness after a reasonable period, ideally between 10 and 20 years. And to reduce informational barriers, which are significant when it comes to income-driven repayment, the new plan should be paired with loan counseling and communication tools. And this is one area where AI could be leveraged to deliver personalized, accessible guidance. One word of caution here is that data protection and privacy should be prioritized. The new plan should also grandfather in existing borrowers and avoid forcing transitions into the new plan, which could disrupt the lives of those who made financial and life decisions based on current repayment terms. Crucially, any changes should preserve the Public Service Loan Forgiveness Program. While refinements to improve access and clarify eligibility are welcome, changes shouldn't reduce benefits for public servants or discourage talented individuals from entering public service. As we've heard throughout the day, teachers, nurses, public defenders rely on PSLF to sustain their livelihoods and to plan for the future. Finally, I urge the department to put in place a plan to evaluate the effects of any changes made through this rulemaking process, including on borrower outcomes. In closing, students and borrowers are watching. As we've heard today, and as research confirms, loan uncertainty affects not just but also their mental and physical health, their career paths, their workplace productivity, home ownership, and their family planning decisions. I hope this process results in reforms that make college more affordable, not less affordable, for people seeking higher education and a better life. Thank you.
Hi, my name is Dr. Nicholas D. Hartlep. I hold the Robert Charles Billings Endowed Chair in Education and chair the Education Studies Department at Berea College in Berea, Kentucky, where we train future K-12 teachers. At Berea College, every student receives a Tuition Promise scholarship that covers 100% of tuition. And through our labor program, students work campus jobs to help offset other expenses. Our model allows most graduates to leave with little or no student loan debt, making Berea a national leader in affordable higher education. However, most students across the country do not have this opportunity. Student loan debt weighs heavily on borrowers, particularly those entering public service professions like teaching, where salaries are low. As a former public school teacher and now teacher educator, I have studied and researched student loan debt. I have published peer-reviewed books and articles on the negative impact that student loan debt has on individuals and our society. I also personally benefited from the Public Student Loan Forgiveness PSLF program, having my student loans forgiven this past year under President Biden's temporary expanded PSLF or TEP-SLF program. I'm here to urge the U.S. Department of Education to preserve and strengthen income-driven payment plans and the PSLF program. PSLF was signed into law by a Republican president and has bipartisan legislative support. I'm concerned by data that shows that very few Americans enrolled in the PSLF program have had their student loans forgiven. The U.S. Department of Education should make it easier to recertify employment annually and improve communication with borrowers to make sure they understand eligibility requirements. Vendors like Mohila haven't made this process very easy. Mohila often gave incorrect or misleading advice, leading borrowers to make ineligible payments. Moreover, many borrowers were unaware their loans or repayment plans didn't qualify. We must streamline and safeguard these programs, not make them harder to access. Thank you for your time and for your commitment to improving these critical programs.
Hello, my name is Arielle Kuperberg, PhD. I'm an associate professor of sociology at the University of Maryland, Baltimore County, and I've been doing research on student loans for around 10 years. This research has included analysis of national data sets along with surveys and interviews of college graduates with and without loans, who my collaborators and I have followed over time for up to 8 years past graduation. I've published 5 peer-reviewed articles and numerous additional works focused on the non-financial consequences of student debt for college graduates with loans, including family, housing, and physical and mental health. If the department wants to streamline and improve student aid programs, my research suggests 4 key actions. 1, the department should reduce administrative barriers, such as simplifying the public student loan forgiveness program process. 2, they should shorten repayment periods in income-driven repayment plans. 3, they should reduce or eliminate interest on loans. And finally, the department should maintain strong borrower protections, including being able to discount spousal income in income-driven repayments. Eliminating this protection would further discourage loan holders from getting married. My research has found that loans expand access to higher education to those who don't have family money to pay for college up front, leading to large gains in lifetime income for the average borrower. However, despite increases to average income, those who graduate college with loans are less likely than college grads without loans to get married or have children. They have worse self-rated health and mental health, and are more likely to delay healthcare or reduce the amount of prescribed medication they take in order to save money. These healthcare delays also result in more major medical problems in the long term. My research has determined that these outcomes result in large part from a strong sense of financial responsibility when it comes to paying down debt before getting married, having children, or paying for other expenses. Many borrowers have reduced disposable income from high loan payments and compounding interests, which makes them feel they will never be able to pay off their debt. These negative outcomes for those with student debt demonstrate the importance of debt relief programs. Reducing or eliminating compounding interest would allow those with loans to make meaningful progress on paying off their debt. Expanding access to income-driven repayment and PSLF and reducing the time to which debt is paid off in full on these plans would allow those with loans to move forward with family formation and would improve health and mental health. Finally, I would add that the uncertainty and constantly changing programs and policies related to student loans are worsening the problem. Borrowers struggle to plan long-term, especially when it comes to decisions such as starting a family in the face of unclear or shifting policies. Thank you for your time.
Thank you for the opportunity to speak with you today. I'm Dr. Joan Mazelis, and I'm an associate professor of sociology at Rutgers University, Camden. I've been researching student loan debt and its consequences for the lives of college graduates with loans for nearly a decade. My work has focused primarily on longitudinal, in-depth interviews with college graduates who took out student loans, who I interviewed as many as 7 times over an 8-year period as they transitioned to their post-college adult lives. If the Department of Education seeks to streamline and improve student aid programs, the best way to accomplish this is to simplify and expand these programs. First, the department should reduce barriers to access by making it more straightforward for those who qualify to apply for public service loan forgiveness. Second, the department should allow all those who need income-based repayment plans to enroll in such plans, enabling them to pay off their debt in full, a widely shared aim that most people think is fair. Third, student loans should be interest-free. All of those I interviewed want to pay back their loans, but it's not sustainable to have borrowers pay back more than they borrowed. People I interviewed, some of whom worked as nurses during the height of COVID, and others who worked in other public service jobs, struggled to navigate the system to qualify for public service loan forgiveness. Making it easier for those who deserve access to this program would streamline and improve student aid. Such programs should encourage people to get the necessary training to do difficult and important jobs like those of frontline healthcare workers. Without access to public service loan forgiveness, I'm opt instead for higher paying private sector careers. And if the system isn't fixed, people like them may not even bother with college in the future. With an aging population needing more healthcare, we need more nurses and others in healthcare, not fewer such workers. I want to highlight the only person in my research who was able to successfully get their loans forgiven, a young woman who worked as a social worker with vulnerable children. Her student debt was forgiven only because she became permanently disabled with brain cancer and then had her loans discharged. She soon passed away. People shouldn't have to die to overcome the crushing debt of student loans. Government used to fund higher education at greater levels, and students could attain a college degree with the use of grants, having reasonable out-of-pocket costs. But things are different now. The cost of college is out of reach for most people. People take out loans to attend college because they want to have a chance at upward mobility and the American dream. They want to pay back their loans, but some have paid for so long they've paid more than they borrowed, and they still owe. College should be accessible to all, and income-driven repayment and public service loan forgiveness is part of what makes that possible. Without it, college would only be 20 seconds. Without it, college would only be for the wealthy or those who choose the most lucrative careers, and some of the most important jobs would remain vacant. Thank you for your time, and again, thank you for the opportunity to speak with you today.
Good afternoon, and thanks for the opportunity to speak. My name is Dr. Whitmore Jr, Assistant Professor of Higher Education at Boston University's Wheelock College of Education and Human Development, and a board member of a local education nonprofit. I grew up in a single-parent household in rural Tennessee. My mother worked in the factory to put food on the table to keep 3 boys out of trouble. She earned her GED later on in life, and college wasn't something I was sure even meant for someone like me. Coming from a low-income background, the PSLF program was a lifeline. It helped me break a cycle of generational poverty. Because of PSLF, as a first-generation college student, I was able to pursue a career in education, not just to teach the next generation, but also to research how we can make education more effective. Today, I support my family, give back to my parents, the community, and the state. That's the promise of PSLF. We must be mindful not to build policy around false narratives. The people served by PSLF, public school teachers, early childhood educators, healthcare workers, public offenders, and others, are not a threat to society. They are the backbone of local economies and thriving democracy. The executive order issued on March 7th suggested excluding organizations that allegedly have a substantial illegal purpose. A vague and politically charged criterion threatens to disqualify legitimate nonprofit entities providing vital public services. PSLF was never about politics. It was about service sustainability, ensuring that people from all walks of life could afford to give back. Undermining that now risks not just careers, but entire communities losing the public servants they depend on. And so let's be clear, any effort to also eliminate student loan forgiveness programs under ICR and PAYE would directly attack working class Americans who have played by the rules. These programs are not giveaways. They're carefully designed to promote personal responsibility while recognizing that borrowers should not be punished for choosing service-oriented or modest-paying careers. So ensure legal clarity and long-term sustainability, the department should codify long-standing forgiveness provisions and maintain borrower accountability through sustained payment requirements. Preserving these programs aligns neatly with the administrator, rewarding work, promoting personal responsibility, and upholding the federal government's word to its citizens. And finally, streamlining Title IV regulations can encourage innovation in higher education, but changes must be targeted and transparent to avoid waste and fraud. While reducing red tape is essential for career-connected education and meeting the needs of adult learners, we must be cautious of deregulation that enables predatory practices, especially in low-quality online programs. This administration has a chance to support accountable innovation that enhances workforce development and economic mobility, but it must protect students and taxpayer investments for exploitations. So in sum, I support efforts is streamlined. Thank you so much for the time.
Thank you for your comment.